Hi, in this video I'll be sharing with you how exactly you can trade a trendy market such as this. There are instances when you open your chart, you realize the price is moving in a very trendy market. And if we are to identify our structural point here, this is our higher low, this is our higher high, higher low, higher high, higher low, and our higher high. So in this case, if you are doing this based on our smart money concept, in this zone here is our order block. So here is our typical order block. We have our order block here, and of course you can see what happened. Price went to the upside. We take this order block and then now it's pushing back to the upside. And in this movement we have what? We had this imbalance. So you can see that there's an imbalance in that zone. Alright, so if this entry was to be on a 15-minute time frame, of course, you can see exactly how it happens. Price tapped quickly into this order block, was rejected from there, and then begin to pull to the upside. You can as well use your trend line to find your entry in this price scenario. So your trend line being connected this way, perfect. What happened? Price came, price break out of the trend line, retest it, and you can see how price is pushing to the upside. But however, there are instances where you might find it difficult to locate this type of structural point or a point of interest. Here we have a smart money cube. So this is a smart money cube in the price there. So, and then we are still having some level of imbalance here. So how do we handle such scenario where price is trendy and it becomes difficult for us to identify this zone? We can simply do that by using our moving average. So we're adding moving average, and then the period is 20. So this moving average 20 method is exponential, just as you are seeing. The moving average 20 shift to 0, the method is exponential. It's one of the best indicators that can help us in a very strong, healthy trend such as this. So what does that do? When trend is very much healthy and it is strong, price tend to respect the 20 period moving average. Just as you can see, this method is applicable to assets with high volatility. For instance, gold. Let's look at gold. You have been trading gold, you know how volatile gold is. You can see now, you can see how fast, how volatile gold market always move. So how do we trade this? All you need to do is for you to establish your trend. So you can still come to your higher time frame, unlike this H4, and use the 4 hour to establish your trend. How do you do that? If for your H4 price is trending above the 20 period moving average, which is what you are seeing here, we will say that we are in a what? We are in a healthy uptrend. So you can now move to your 1 hour or your 15-minute time frame in making your entry. So what you will be doing is that you are waiting for a pullback into the moving average. Just as in this scenario, price pull back from here, pull back to the middle, to the moving average. Okay, when price pull, you'll be patient enough for price to close back above the moving average, and immediately that happens, you can now have your entry. Then you use your indicator window to make the confirmation. So your commodity channel index should be coming from the level of 10, just as you are seeing in this scenario. It is coming from 10, and that is a perfect trade entry. So another thing you will do, you kindly pick up your trend line. So you are not trading in isolation, you applied a little price action. So that's what happened. Here now, price break out of your trend line. You can see price break out of the trend line, retest the moving average, and you see that move to the upside. Another time you had this pullback, okay, and in this case be patient for price to close above the 20 level of the commodity channel index. With 50 level, because this is a continuation, so price pullback, you can see that sign there, and that is your trade entry, and it pulled to the upside. So here now we had a trade, we are having a live trade entry. Price has pulled back here, and then look at this, and we already had this confirmation. So what do? We will carefully come in and place our buy trade. So that's our buy trade. We have our stop loss at this low. So this is how it works. Now the stop loss is higher due to the time frame I am making entry from. So the best way is you can move to your 15-minute time frame. Can you see that? So this 15-minute time frame, and of course this is a late entry when I'm considering this particular time frame. Here should have been my trade entry. Do you see that? Price does what? Price break out of this trend line, came back, retest this moving average. So here you can see this particular pin back candlestick confirmation, and that is my trade entry. And again, if you discover that your CCI is already at the level of 90, it is not ideal in most cases for you to make that entry. Okay, I should have made the entry when the CCI was here. Let's look at when the CCI was there, where was price? Now that is immediately when the price break out of that zone. So our entry was meant to be at this particular level, or this particular pin bar candle. So should I make the entry at this point? So this is how exactly it works. So let's go back to our AUDJPY. So now looking at this is a healthy trend, right? And price has been respecting this. So you can look at what I was saying earlier. When it pulled back here, you had your entry. When it pulled back here, it crosses here, you have your entry. And then when it closes below it, you will be patient to wait for price to return above it. So here now, look at what happened. Price just crossed above the 50, which is a continuation trade, and price just closed above the 20 period moving average. So we can do it this way. Here is a signal. So let's be patient a little for price to break out of this carefully. Then we'll make our entry. So let's look at 15 minutes. So on this 15 minutes, if we were to be here earlier, we would have made our entry here. Our entry could have been at this point, right? This would have been our entry. when this price break above this period. So here would have been our buy entry and our stop loss would have been here. So would have been in this trade earlier. So that is exactly how you can take advantage of this particular price behavior when price is in a very healthy trend. Okay, so but however, look at this 4 hour. On this 4 hour, price has come below the 20 period moving average and price is here. So it is ideal we take a break, be patient for price to close above this to establish our uptrend. So as it is now, price is making a pullback and then we'll need additional confirmation for us to buy. Okay, so that's exactly how this pattern works. It is simple and it is straightforward. Thank you for watching and see you in the subsequent video.